Hello, everybody, and welcome to today's December daily Q&A session for Nabers Group and Solo401k.com. It is Monday, December 21st, and we do have several pre-submitted questions, so we're going to get started with those first. The first question we have here comes from Ed. Ed says, "Hi. After I open a bank account, do I just move money over into it? Do I need to fill out anything?" Great question, Ed. I'm going to go ahead and share my screen for this first part. We'll probably share our screens on and off through the entire call today. That makes it a lot easier for you to be able to see what I'm seeing and make sure that you're able to navigate through your own 401k dashboard. So let me just share that here. Okay, so you should be able to see my screen now, Ed. After you open a bank account, do you just move money over it? Do I need to fill out anything? Well, the first thing to determine, Ed, is if you are starting with a rollover or a contribution. I think based on your follow-up question here, you're talking about a contribution. So I'm going to show you how to document that. On your 401k dashboard, click on Forms and then Contribution Form. This is going to open a Solo 401k contribution form in a new window. And what you'll be able to do is complete this form, save a copy for your records, and share a copy with your CPA. This is how you are going to document the contribution coming in to your Solo 401k plan. And so what you're saying is, after I open the bank account, do I just move money over into it? In short, yes. You're just going to transfer funds from your bank account to your 401k trust bank account. Your next question here, Ed, is if I made $88,000 before any deductions, can I move $40,000 into my 401k now? Then can I take a loan of $20,000 at any time with no waiting time before I can get a loan? So let's tackle, there's a couple of questions there in one, Ed. Let's tackle the first is, if I made $88,000 before deductions, can I move $40,000 into my Solo 401k now? So it sounds like you're asking about a contribution. So let's go here to, actually, I'll just do it easy. If we go back to our dashboard and we click on Calculators and Contribution Calculator, that's going to open up the contribution calculator. Now, Ed, I don't have your business structure in front of me, so do keep in mind that you want to select what type of business you have. If you have 1099 earnings or you're a single member LLC or a sole proprietorship, you'll select unincorporated sole proprietorship. If you have a multi-member LLC or an S Corp or a C Corp as your business entity, then you'll select single owner corporation. Now, if you said your net income, well, you said it was before deductions, but let's imagine this is your net income because I'm not sure what your net is going to be. Then you'll see here, if you have a net income of $88,000, yes, you can contribute over $40,000 right into your Solo 401k plan. So going back to your question, Ed, if I made $88,000, can I move $40,000 into my 401k now? Yes is the answer. Complete your contribution form, document that contribution, and then move money into your 401k trust bank account. Your next question is, then can I take a loan of $20,000 at any time with no waiting? Yes, you are able to do that as well. Let's go back to your 401k dashboard, and you'll click on this link here that says loans. There's a helpful walkthrough video here. We also have our participant loan calculator so you can see what your loan repayment will be. You'll put in your loan amount. In this case for you, Ed, it's $20,000. You'll select your loan term. You have up to 5 years to pay the loan back, and then put your information in here and press submit. That's going to create the promissory note and amortization schedule and loan repayment schedule for your Solo 401k participant loan. So to recap for you, Ed, now that you have your plan set up and your bank account is open, you can make your contribution from your 401k or into your 401k. Once the funds are in your 401k trust bank account, you can immediately prepare your loan. Our documents are going to allow you to vest immediately. So that means you can take that loan right away as well. Your next question is, how can I turn 20,000 of it into Roth and pay the taxes on it? So this is a great question, Ed. What you'll want to do here is go to support. That's going to take you to our knowledge base. And then I like to do a search for convert, because you want to convert those funds in plan. And we have a couple of articles here. This one is an infographic that walks you through with pictures. Some of us are visual learners of how to convert your 401k funds to Roth. Alternatively, we have another article that walks you through exactly how to do the in-plan Roth conversion. So you'll have an in-plan Roth conversion form in your 401k documents. If we look here back at the documents, this is your 401k plan and trust. This is a zip file. In this file, in this folder, you have a form called an in-plan Roth conversion form. So Ed, what you can do is you can calculate the taxes that will be owed on your in-plan Roth conversion. And if you see what I just did, back on your 401k dashboard, I selected calculators and then Roth conversion calculator. So Ed, for you, for the Roth conversion, you can put your information in here, see what your tax burden will be based on this conversion. And then you can convert those funds, which really just means you're moving them from your pre-tax bank account to your Roth bank account. Great question, Ed. I know you've got a lot that you're trying to get accomplished here, but to recap, yes, you can now make your contribution to the 401k. Yes, you can take a loan from your 401k. And yes, you can convert your funds in plan from pre-tax to Roth. Great question, Ed. Okay, our next questions come from Ramesh. And Ramesh, I know you have a handful of questions here, so we'll tackle those one at a time. Ramesh's first question is there a target date by which we need to complete the rollover process and complete funds transfer? Great question, Ramesh. There is no deadline to roll over funds, so you can do that at any time. Even though you have your plan set up for 2020, which is great, the rollovers are not part of your contribution calculations. Rollovers are not part of your taxes. So you can choose to initiate your rollover anytime, including starting in January. The next question from Ramesh is, for bank account creation, do we need to open separate bank accounts for my wife and myself separate from the trust? If so, how can we combine funds for a trust? This is a question that we tackle almost every day, so I'm really glad that you have submitted it, because I think it really bears repeating to help, make it really clear what you're doing here. So I'm going back to sharing my screen, and I'm going to go back to our knowledge base. And remember, just so you know how I got here, in your 401k dashboard, you click on the link for support, and that's going to open up our knowledge base for the solo 401k. Now, Ramesh, what you want to keep in mind is that you and your spouse want to maintain separate bank accounts because you are each participants in the company retirement plan. You will have a bank account and your spouse will have a bank account. Both of these bank accounts are under the 401k trust. And I have a diagram, but it's not on this computer. I'll make sure that I post that for you as well, Ramesh, so you can see it here. We have a nice diagram that sort of gives you a visual of the trust, and it has up to 4 or 6 sub-accounts. So Ramesh, you might have an account for yourself for pre-tax funds. Your spouse might also have an account for pre-tax funds. You can have an account for Roth funds, and your spouse might have an account for Roth funds. The 401k trust is the owner of all of those accounts, and you are each participants. Different bank accounts just makes it easier from a record-keeping perspective. Now, if I type in spouse here to the knowledge base, you'll see we actually have a lot of articles all about spouses. And one that I'm looking for in particular is, how can my spouse keep her funds separate in our solo 401k? And then my spouse and I are co-trustees of our solo 401k plan. Is it possible to have separate bank accounts for the same solo 401k, one for each of us? So Ramesh, to answer your question, yes, you and your spouse will each have separate bank accounts, and our knowledge base will walk you through how to do that. Essentially, what you're going to do is set up one account for you, one account for your spouse. Those are both titled in the name of the trust. And then you'll put little nicknames on your online banking so you can keep track of whose is whose. Okay, the next question from Ramesh is, what are the contribution limits for 2020? We are still below 50 years old. Great question, Ramesh. If you go to our website at solo401k.com and contributions, the contribution limit is $57,000 per participant per year. So that's the maximum that you can put in, Ramesh. That's the maximum your spouse can put in. Those are based on your net earnings. To determine how much you're able to contribute, we would recommend you go to your 401k dashboard, go to calculators, click on contribution calculator, and then plug in your numbers here. That way you can determine how much you're able to contribute. The next questions from Ramesh are here that says, my wife owns the business and I used to work for the company between 2015 to 2016. We both contributed to the solo 401k between 2015 to 2016. But from 2017, my wife is the only one contributing to the 401k as I took a full-time job with another company. I moved back to my wife's company in December 2020 full-time, and I've already maximized my 401k contribution from my previous employment. How much can I contribute to the solo 401k for 2020 in addition to my wife's contribution? Great question. So Ramesh, remember there are two types of contributions in a retirement plan. And we'll go back to our website where we can go to contributions and solo 401k contributions. There's two types of contributions in a solo 401k. There's employee salary deferral contributions and employer profit sharing contributions. Employee salary deferral contributions, this is the $19,500, which can be up to 100% of your net compensation. Now, Ramesh, for you said that you already maxed out your $19,500 at your previous employer 401k plan for 2020. So what that means is for your solo 401k for 2020, you can still contribute up to $57,000, but it is only going to be an employer profit sharing contribution. Based on the structure of your business, this will either be 20 or 25% of your net earnings. And our contribution calculator is really going to be helpful for you. So what you'll want to do is, let's say you're earning $100,000 as your net compensation and you get a W-2 in your wife's business. That would mean of your $100,000 on your W-2, you can contribute $25,000 to the solo 401k because that is your employer profit sharing contribution. As always, we recommend that you are working with your CPA or your accountant to make sure you are properly calculating your contributions. It is definitely a good idea to engage your tax advisor here so they can go through those numbers with you and make sure you are properly calculating your contributions. Okay, the next batch of questions from Ramesh. In the future, if we had to close our business and we stop contributing to the 401k, does it mean we have to close the 401k account as well? I don't think this is the case, as the 401k is independent of the company. Can you please confirm? This is a great question, Ramesh. And actually, the 401k is not independent of the company. Your 401k is a company-sponsored employer retirement plan, a qualified plan. A qualified plan requires a sponsoring business in order to remain active. If you shut down your business, you have a couple of options. You can start a new business, and then we can change the 401k documents to show your new business as the sponsor. Or if you shut down your business entirely, then the 401k plan would terminate as well. And depending on where you have your assets, you might just roll the funds into another 401k or another IRA. Or if you're holding alternative assets like real estate, Bitcoin, private lending, real estate syndications, then you would want to move those assets into another checkbook control structure, like a checkbook IRA. We have helped many clients through retirement where they are winding down their sponsoring business for the solo 401k. And in that instance, we can really take a look at what they're planning to do. Some people will continue working on their own in their own business their entire life. It brings them joy. It brings them purpose. In that case, simply changing the business connected to the 401k is a great option. But if you are retiring completely and you are not running any other businesses, then what we would do is to help you roll over your assets into a checkbook IRA structure if you have alternative assets, or you can simply roll them into a traditional IRA if they're just going to be in traditional equities. Great question, Ramesh. And okay, we've got one final question here from Ramesh's batch of questions. These are great questions. Ramesh asks, can we use our trust funds to invest and operate a laundromat business or some other business with no partners? If so, can the laundromat business be run by me and my wife as there are no other partners? What sort of investments are allowed for solo 401k funds? This is a great question, Ramesh. So I see two potential pitfalls with this suggestion. The first is your 401k plan is meant to be a passive investment structure. The IRS wants retirement account investing to be passive. That's why they allow it to grow as tax deferred. If you are going to use your 401k money to invest in a business, then the IRS will want to collect income taxes. Yes, even on a 401k. If the IRS thinks you are running a business in your 401k, they will collect income taxes. And that kind of defeats the whole purpose of having a 401k plan. So we recommend that you keep your investments in the 401k plan passive. But now the second question or second, item that I want to touch base here, Ramesh, is something called a prohibited transaction. And I'm going to share my screen for this to show you a helpful page that we have on our website that I think will be really valuable to you here. So if we go back to our website at solo401k.com, I'm going to click on this link here for prohibited transactions. The IRS has rules that you must follow when you are investing with a retirement account. And there's not too many things that are prohibited as far as investments. The IRS allows you to invest all kinds of different things. What is more that you need to be aware of is who the 401k cannot transact with. So you'll see right here, these two people are disqualified from the retirement plan, you and your spouse. So Ramesh, you're asking, can you use your 401k money to operate a business, which will generate, income taxes even on that 401k, and you want to run that business. But as you can see, you and your spouse are disqualified from your 401k. You're not allowed to work in a business that your 401k owns. The IRS considers that a prohibited transaction, and they can charge you up to 115% tax. Do not do this. Avoid this. If you would like to get money out of your retirement plan because you want to start a small business, that's excellent. You can definitely do that. And the participant loan is the way to go. So going back to your 401k dashboard, click on loans and take a participant loan. Each participant can take out up to 50%, maxing out at $50,000 each from the 401k plan. So Ramesh, if you would like to launch a business and you need startup capital to do that, what you'll want to do is take a participant loan from your 401k plan. That money comes to you directly. It's tax-free. It's a personal loan from your 401k to you. And then you can use those loan funds for anything you want. I would not purchase the laundromat with 401k funds for two reasons. One, it's prohibited for you to work in a business owned by your 401k. That's the big no-no. And then number two is if your 401k is operating an active business, the IRS can charge you income taxes on it. Then your income is taxed and your growth is taxed. You're not receiving those benefits of tax-deferred income. to keep the benefits of growing your income tax deferred, keep your retirement account investing passive? Great batch of questions, Ramesh. I appreciate you bringing those up. Our next question comes from Justin. Justin asks, "Hey, Rachel, my mom has a retirement plan from her hospital and would like to buy some real estate with me. I am the lead GP on an apartment deal. We close next week. Would it be possible for her to set up a solo 401k? Can she invest through that since I am also investing and the lead GP?" Great question, Justin. So first, of course, your mom would need to determine if she's eligible to open a solo 401k plan. Remember, you do need to qualify to have a solo 401k. Solo 401ks are meant for small business owners. And surprise, surprise, I'm going to share my screen again. If we go back to our website at solo401k.com and under setup, or where is it? Under qualification and how to qualify, we have a link right here that says test your eligibility. So I'm going to put this link in the chat. See if you qualify for the solo 401k. Okay, so Justin, the first thing for you to do is to make sure that you are ensuring that your mom qualifies for the solo 401k plan. That's step number one, is to see if she qualifies. Now, if she qualifies and if she sets up a solo 401k, let's go back to those prohibited transactions. So you'll see on the disqualified persons, your lineal ascendants or descendants. This is parents, grandparents, children, grandchildren. They are disqualified. So I think that you would need to talk to your legal counsel or your accountant to see if your mom is able to be an LP on a deal where you personally are the GP, if this is considered investing with a disqualified person. We're not your compliance officer. We're not your attorney. So we can't make the final judgment call on that. But I would have some pause on this because, Justin, if you are the general partner of the deal, this is your business essentially, and your mom is investing her 401k funds into your business, that would give me pause. I would wonder if that would trigger a prohibited transaction from the IRS. To be conservative, I would definitely say you want to check with your accountant or tax advisor and see what they say in this situation. Thanks for that question, Justin. It's a good one. Okay, our next question comes from Nancy. Nancy says, one more question to clarify. So someday when I withdraw funds from the Roth account at Fidelity, Fidelity would send me the same form for tax purposes as the one if I withdraw from the solo 401k, right? Then how can the IRS tell which account I actually withdrew from, the pre-tax or after-tax account, since they're all under non-prototype accounts in Fidelity and only I know and label them as Roth and traditional? Good question, Nancy. So I think what you're asking here is you've set up a solo 401k with us and you want to set up brokerage accounts with Fidelity. Those are non-prototype retirement accounts. You want to set up two accounts so that you can have one for pre-tax and one for Roth. And your questions are, who does the tax filings when you do a withdrawal? And how does the IRS know if the funds were pre-tax or after-tax? It's a great question. So first, as far as the filings for withdrawals, you are the plan administrator. So you will be the one to prepare that 1099-R. We provide extensive trainings and guides and resources to help you with this, but Fidelity is not going to prepare that form for you if it's a non-prototype retirement account. With a non-prototype retirement account, that means Fidelity is just the investment platform. They're not your solo 401k. The solo 401k is the documents we provide for you, and Fidelity is just the bucket that you're using to invest. So Fidelity does not provide those tax filings because they are not administering your 401k. You are the 401k administrator. So that means you prepare those tax filings, or you and your accountant will prepare those tax filings. And then, as far as knowing the difference between pre-tax and Roth, that is going to be a determination based on your internal records. So you are the plan administrator. You want to keep very clean records for the 401k, knowing which account is designated for which type of funds. And then you would be able to trace back the lineage of those funds. So for example, let's say you have a Roth non-prototype retirement account to hold your Roth funds with Fidelity. You would be able to trace how those funds came into that account. Was it a rollover from another Roth 401k? Did it come from an in-plan Roth conversion where you converted the funds in plan and then moved them into the Roth designated account with Fidelity? Were they simply Roth contributions? This is where keeping clean records for your plan is so important. You want to be able to trace the lineage of those funds, so it's quite clear which account is designated as for your Roth funds and which account is designated for your pre-tax funds. And then you will submit the appropriate tax filings when you make a withdrawal. Of course, I know you're going to think I'm a broken record by now, but always make sure your CPA or your accountant or your tax advisor is assisting you with this. It's totally worth it to have an expert who's at your side, who's your engaged financial professional, to be supporting you so that you get this stuff done right the first time. Great question, Nancy. Okay. Aaron asks, what do I need to do next? Do I have to open something? I recall you saying that you have to put the account wherever I want to have it, but also that I get checkbook control. I guess I'm confused how I can take a loan out if the account is sitting somewhere that doesn't allow that. I found this chart of the more popular places and what they offer. If something different in that I'm going through you guys. Good question here, Aaron. I think I can follow what you're saying. So, Aaron, you are setting up your new solo 401k with us. I know our team was working on your tax ID number this morning and getting those documents ready for you. And I think that your question is, well, what do I do now? So we have a knowledge base article for that. Let me show it to you. So if we go here to our website or to your dashboard and you click on support, any of these support links is going to take you right to our 401k knowledge base. And I'm going to say set up. So you got that set up. Oh, look right here. It says, I set up the solo 401k with Nabers Group. Now what? This will take you through sequentially exactly what you do after we prepare your documents. So your first step, Aaron, is going to be to sign your plan signature pages. We give you a list of exactly what's included. Then you're going to open your bank or brokerage account, and we give you all kinds of training for this in your knowledge base here and in your 401k documents themselves. Then you're going to fund the account. That's either going to be from rollovers or contributions. We give you the steps here, and then you're ready to start investing. Or in this case, Aaron, if you want to take a loan, you can do that. So I'm going to post this link here in the chat, Aaron. That way, when you're reviewing the replay, you can get to it easily. So this is okay. There we go. You set up the solo 401k with Nabers Group. Now what? So this article, Aaron, will walk you through sequentially exactly what to do next. And yes, your account has checkbook control. So you had sent me a comparison of Schwab and Fidelity and TD. And, you know, when it says loan, they're all like, no, 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 they don't do loans. And remember, if you set up a brokerage account, let's say with Schwab, Schwab is not your solo 401k. Schwab is just the investment portal you're plugging into to be able to execute your trades. The rules around what your 401k can invest in are in the documents we provide for you. And we do allow loans. That's the whole point of checkbook control, is for you to be able to decide and determine how you want to invest the funds, including the ability to have loans. So if you go to your 401k dashboard and then you click on this link right here that says loans, that will take you to this page, and this helpful video walks you through how to complete this short form. You can calculate your loan repayments and then prepare your promissory note. So let's say you have an account with a brokerage account with Schwab. Schwab is not preparing your loan. Schwab is not approving your loan. Schwab is just the investment platform. Our 401k documents that we're creating for you, Aaron, are what make the rules for your 401k plan. And so we and our software would create the loan documents for you. So I hope that that's helpful. Make sure you're reading through the link in the chat that says, I set up the solo 401k with Nabers Group, now what? And then this page on your 401k dashboard should be quite clear as far as how you can then take your loan once you get the plan funded. In short, the steps for your solo 401k are set up the plan, which means complete your application and then we prepare your documents. Fund the plan, so that's do rollovers, contributions, put them in a bank or brokerage account connected to your 401k, and start investing. Thanks, Aaron. Okay, our next question comes from Raghu. Raghu says, as an employee, I can still contribute towards the 401k, correct? I would like to know how much we can contribute as an owner and as an employee this year for a 2020 contribution. Can I contribute the full year's contribution amount in one payment towards the 401k plan by December 31st? And the profits towards an IRA contribution can be made by April 15th, 2021, or even that should be contributed before December 31st. Great question, Raghu. Okay, let's try to tackle them all. So as an employee of your own business, yes, you can make employee contributions to the solo 401k. If you are also contributing as an employee somewhere else, then you need to calculate those contributions, because remember, contributions for employees are maxed out across all plans. So Raghu, if you already maxed out your employee contributions at work, what you have left over for your solo 401k is your employer profit sharing contributions. If you are not maxing out a 401k at work, then you have the entire amount, or whatever the calculation is. Let's say you're putting in 10,000 at work as an employee, you would have 9,500 left over in a solo 401k for the employee, and then the remainder as profit sharing. Raghu, I'm going to share my screen here to take you through so you can see our 401k contribution calculator. If we go to your 401k dashboard right here under calculators, click on contribution calculator, then that's going to open that up for you. And then you can input your business type, single owner corporation or sole proprietorship, depending on what type of business you run. Put in your net income and your age, and you'll see exactly how much you're able to contribute. Of course, we definitely recommend that you work with your accountant or your tax advisor so that they can help you to calculate those contributions. But this calculator right here is going to help you determine how much you can contribute as an owner and how much you can contribute as an employee. If I plug in your numbers, let's say these are your numbers, and you click View Report and then scroll down, it'll show you quite clearly right here how much is the employer contribution and how much is the employee contribution. So make sure you click on that View Report button and then scroll down, because that will give you a breakdown of how much is employer versus employee. Your next question was, can I contribute the full year's contribution in one payment towards the 401k plan by December 31st? Yes, you can. That's totally fine. Make sure that you're working with your accountant or your CPA so that they can properly document those contributions on the books for your business. You don't have to make the contribution by December 31st, but if you have the funds available and you have your 401k bank account open, then you are able to make that contribution as one lump sum and work with your accountant so that the contribution is properly documented in your company's books. Now, the next question you have here, Raghu, is you says, and the profits towards IRA contributions can be made by April 15th, 2021, or even that should be contributed before December 31st. So an IRA is different than a 401k. I'm not sure where you have your IRA, but typically IRA funds the contributions need to be made by tax day. And the same rules apply for a 401k. You have to make your contributions by tax day. So the only deadline that you have for December 31st is getting your plan documents established by us. So you need documents from us by December 31st, and then you have until tax day to make those contributions. Make sure you're using that contribution calculator, Raghu. I think that will be really helpful for you in determining your contribution numbers. Okay, next question comes from Yun Hee. Hi again. 2 questions today. 1, can I purchase Bitcoin and other cryptos inside of a solo 401k? Can I legally transfer to cold storage? And also, do I need a fax number? Great question, Yun Hee. So let me go ahead and share my screen here. I have a very helpful article I think will be valuable for you. So on our website, if you go to support, you can also get this from your 401k dashboard by clicking on support. Then just type in Bitcoin into the search bar. And it says right here, how to buy Bitcoin and cryptocurrency with the solo 401k. I'm going to go ahead and link this article in the chat for you, Yun Hee. I think this will be really helpful. Read through this article. Yes, it shows you that you can purchase Bitcoin and other crypto through the solo 401k. And yes, you can use cold storage. You do not need a fax number. You might be referring to the rollover form on your 401k dashboard. If we go to the 401k dashboard and click on rollovers, you'll see that there is a place here for a fax number. We've been doing this since 2006. And back in the old days, these custodians required a fax number. Now this is optional. So if you don't have a fax number, then you can just leave this section blank. Great questions, Yun Hee. Thank you. Okay, next question comes from Sunil. Okay, Sunil says, hi, Rachel. Hope you're doing well. I have one thought and one question today. So let's see which one's first. Is it the thought or the question? So while talking to our family CPA about the solo 401k setup we did, here was his thought at the end. Most people don't try to have a self-managed solo 401k, and they certainly don't try to trade Bitcoin through it. They go through a financial company like Edward Jones and have them set up and manage the account. Should his opinion worry us in any sense? Well, Sunil, I'm going to be really honest with you because I know you. So I think that most financial advisors have no clue about Bitcoin. They've never heard of it. They don't know what to do. This is actually one of the reasons why we launched our wealth management division at Nabers Wealth. This is not an offer for those services. It's a completely separate division. But this is one of the reasons why we launched that division, is because our advisors actually understand Bitcoin. They understand altcoins. They understand Ethereum. They understand the presence of real estate in your portfolio. And this is not to speak poorly about your CPA. I'm sure that he's a wonderful individual, but the finance world moves pretty slowly. And most CPAs, financial advisors, are really old school. And I think that they still believe that the 60-40 stocks bonds portfolio is going to go somewhere. Sunil, I know you have personally been in the crypto and DeFi space for a while. So in reality that might not necessarily be true. The world is changing rapidly. This year, we've experienced exponential changes in how we view finance, how the global economy is run, workplace. There's just been a lot of changes. And I think that most advisors and CPAs are slow to change. So we have plenty of CPAs and attorneys that absolutely would be happy to support you on this journey. They understand self-directed solo 401k plans. They understand entrepreneurs and being able to support you in this endeavor. So if this is something that your CPA is maybe just not that comfortable or familiar with, then you might want to consider looking for other counsel that is going to understand and be supportive of what you're trying to do. I know you, Sunil. We've had multiple conversations together. I know that you know how to keep track of your plan records. I know you know how to keep track of your crypto holdings. So if you feel comfortable doing that, then I think a self-managed 401k is absolutely acceptable. People have been doing these self-directed retirement accounts since 1989. Let me repeat that. People have been doing self-directed retirement accounts just like this since 1989. This is not that new. So I think that if your CPA is maybe a little uncomfortable with it, it's probably that you're running into the limitations of his expertise, which is okay. But then you want to make sure you have the right team supporting you. So we've, at Nabers Group been helping clients to invest in Bitcoin since 2013. I think Bitcoin and crypto, while there is a very volatile and nascent asset class, is something that's here to stay. So I think that if you feel comfortable managing your own assets, then you should do that. So that's more of an opinion than an official answer, Sunil, but I hope that helps. So now the next question, okay, I think that one was the thought, and then this one is the question. So from Sunil, any financial account we create on the 401k trust name will most likely generate a 1099 miscellaneous form at the end of the year. What do we do with these forms? It's great questions. It's true that it might not be a 1099 miscellaneous, but you might generate something like a 1099 INT, which is for interest earned on an account, or a 1099 div if there's a dividend paid. If you have properly established the bank and brokerage accounts in the 401k trust name using the 401k trust tax ID number, then that tax ID number is going to be what's on those 1099s. When we get your tax ID number from the IRS, we code it into their system as a 401k. So that means even if you've got a bank account or a brokerage account and you get a 1099, if that 1099 has your tax ID number for your 401k listed on it, then the IRS should know that that's a 401k plan and they will not expect any tax return. So if you get a 1099, and as long as the account is properly established in the name of your 401k and uses your 401k trust tax ID number, then you can usually just file those forms. Nothing further is required. Great question, Sunil. Thanks. Okay, so next question comes from Rupesh. Rupesh says, if we took out a $100,000 COVID loan from the 401k under the CARES Act, what is the process to put the 100K back into the solo 401k so I don't have to pay taxes? This is a great question, Rupesh. And this is where you're going to see the government a little bit with their pants down. So because the government saw the gravity of the situation of the pandemic, they sort of just whipped up this legislation and they said, oh my gosh, people are going to be really hurting economically. We have to come up with something. We let them get into their retirement plans. Just let them get in there. And then they passed the CARES Act, which was really unprecedented access to your 401k, letting you take a loan of up to $100,000 or a distribution of up to $100,000. If you take a loan, then you have to pay the money back within 5 years plus interest, just like a participant loan that you have in your 401k, but with higher limits. If you did the distribution, you have to put the money back within 3 years, or else you have to pay taxes on it. So the answer here, Rupesh, is we don't know yet. The government just released the CARES Act in March of 2020. We have received zero guidance from them on how to document the funds coming back into the plan, or how people are supposed to start paying taxes on that distribution starting next year, like in 4 months. So we have zero guidance from the IRS right now on how they want that handled. I think it's going to be a really big mess, personally, over the next few years. And I think that the IRS is going to scramble to try to submit get out guidance to IRS plan document providers and people that have taken these loans or these distributions. And remember, these distributions came from any type of retirement plan, even an IRA. They let people take out up to $100,000. So there's a lot of people that have taken money out of their retirement plan that now are sort of wondering what they're supposed to do. And the truth is, we don't know yet. The IRS has issued no guidance. What we've been telling people is treat this like an indirect rollover. So with an indirect rollover, you usually have only 60 days. You can take the money out, you have to put it back in, and then you have to show on your tax return where you put the money back in. We're telling clients to prepare as if you need to document this as a 60-day rollover. We don't know if that's the case yet, but that's a good general rule on how you're probably going to have to document this. I'm guessing that the IRS is also going to scramble to try to have some sort of a supplement for the 2020 tax return, where people can check a box or fill out a little form to demonstrate that they took the money out and put it back in. But right now, we're a little bit flying blind, Rupesh. It's a really good question. We just don't have any guidance yet from the IRS. So be prepared to treat it as an indirect rollover, where you take the money out, you document putting it back in, and your CPA will be able to help you document that. And then we just have to wait. We have to wait and see what we hear from the IRS. So good question. Okay, next question comes from Andrew. Andrew says, can my solo 401k build an apartment or second home on my personally owned land and rent it out as a rental property? I know I cannot subdivide the land and sell it to the 401k, nor can I personally collect rent on land from the 401k. But what if I signed an agreement with the 401k to allow the structure to be built on my land at no charge? Something like a land lease agreement with no cost. Since there's no personal financial benefit to me, is this allowed? Great question, Andrew. You need to talk to your CPA or your accountant. So we're not allowed to be your compliance officer. We cannot approve or deny transactions. I think that there's potential for this being considered a prohibited transaction, because even though you're not personally financially benefiting from the 401k having the property on your land, you are personally benefiting as the recipient of your 401k, which is then growing at this with this building on land that you own personally. So I would be a little bit concerned that even in a land lease, even at no charge, you are the person on the other end of the transaction from your 401k, which could potentially be considered a prohibited transaction. But since I am not your compliance officer, I'm not allowed to give tax advice. I will humbly defer to your accountant or attorney that is engaged as your financial professional to give you their qualified opinion. And the reason why I'm saying that is, if your attorney gives you their legal opinion and says, yep, I stand by this, you can do this, it's okay, and then the IRS has an issue with it, your attorney's malpractice kicks in and there's a process to remedy that. If I just tell you on some random Q&A session, yes, I think it's okay, and I'm wrong, then you are still fully liable for that. So I want to make sure that you have the proper financial professionals that are backing you up before you get into a situation that could potentially be a prohibited transaction. If you need a list of accountants or attorneys that are familiar with the solo 401k, check out our knowledge base. I'll share my screen so you can see exactly what I'm seeing. If we go to, let's see, we'll go to our knowledge base. So on your 401k dashboard, click on support. That's going to open the knowledge base. If I click on CPA, for example, bam, right here, solo 401k literate CPA list. And we give you the list of CPAs, attorneys that are familiar with the solo 401k plan. You definitely want to make sure you're running this by them, Andrew. Great question. Okay, another question here by Andrew. Assume my solo 401k does a promissory note to a third party. Probably don't need to see my screen while I'm doing this. Assume my solo 401k does a promissory note to a third party so they can purchase a tangible asset, not real estate or other allowed tangible investment assets, and they default before paying off the loan. Okay, so your 401k lends money to someone and they default. At this point, the tangible asset, the collateral, such as an automobile, is repossessed by the solo 401k. How is this viewed, since the solo 401k now owns a tangible asset, which is not an allowed investment? Is there a rule that the asset must be sold or disposed of within a certain time? Great question, Andrew. Again, I think that this is going to be something that your legal counsel or your accountant will need to help you with. There isn't anything in the rules that says that a 401k cannot invest in an automobile unless it's a collectible automobile, like a historical vehicle. So I actually don't see that as being a problem if there was, a foreclosure or repossession of that asset. I don't believe that there's a time frame that the 401k would need to dispose of it, but you would want to ask your accountant about that, especially if you're going on, or your legal counsel, especially if you're kind of veering off into more exotic secured notes that are secured by different types of assets. You want to make sure that your accountant or your tax preparer is helping you with that. Great question, Andrew. Okay. Next questions come from Marie. All right. Marie says, my husband and I receive 1099 income and we file as a sole proprietorship. I also work for my husband, but I do not receive a W-2. Does that mean I need to open two separate 401ks, one for myself and one for my husband? How can I join my husband under my spouse? My 1099 income is low and will not be able to maximize contributions. Great question, Marie. Okay, so I want to share with you on our knowledge base. This is going to get really nerdy really quick. So again, I will always defer to your accountant or CPA to help you. But Marie, what you want to look into is something called a controlled group. And this article right here, I'll post it in the chat of this today's session. Give me 1 second here. Okay, so controlled group rules. Basically, what happens in a controlled group is the IRS looks at your common ownership among a bunch of businesses. And they say, based on a certain threshold of ownership, are we looking at all of these businesses as one big business? If they are treated as one big business, then they are a single employer. If they are a single employer, then they have a single 401k plan. So I think, Marie, what you want to do, usually with 1099s, those are considered a controlled group. If you and your spouse are legally married, file jointly on your tax return, the IRS is viewing you as one tax-paying entity. So in essence, you own 100% of your spouse's sole proprietorship. They own 100% of your sole proprietorship. Sometimes that changes a little bit from state to state based on property rights, but that's a good generalization. So even if you guys have 1099s, then the IRS may consider those to be a controlled group, single employer, in which case you would have one 401k plan. So I think that the question here, Marie, is you want to talk to your accountant, determine if you are a controlled group, and then set up a retirement plan based on that. Now, if you do not yet have your 401k and you're trying to get set up for December 31st, what I would say is start with one 401k plan. Because I mean, I'm not your accountant, but this sounds like a controlled group. Start with one 401k plan so that you're able to calculate those contributions for all of those businesses. And if you can, I mean, it's the 21st of December, but if you can get in with your accountant and make a clear determination if you are or are not a controlled group, that will tell you how many 401k plans you'll need to establish. If you are not a controlled group, then you would probably do one for each business. If you are a controlled group, big business, one 401k, bam. Okay, Maria, I know you had a handful of questions here. So let me make sure I'm getting them all into our question submission here. Okay, next question from Marie. Can the sole proprietorship deduct the employee part of the contribution on the qualified plan on the tax return, or just the 20% of the employer's contribution only? Good question. Talk to your CPA, of course. Your CPA is going to be the one that's going to determine your where you're charting your contributions and claiming your tax deductions. But if you go to our website at solo401k.com, and then I like to look for claim, you'll see, bam, how to claim solo 401k contributions on your tax return. And we walk through, now this is assuming for a 2019 return, of course, so things might change next year, but this is giving you instructions on how to claim those contributions and where to claim the contributions on your tax return. So we tell you right here exactly where you're going to be claiming these contributions. Marie, I'll post this link in the chat. I think this is a really helpful blog post for you. using this blog post in conjunction with working with your accountant or whoever is preparing your taxes is going to be a great way for you to claim those deductions. But yes, you want to deduct and claim all of the deductions, contributions, that you're making, so you get the biggest deduction. Marie's question number 3: does the solo 401k allowed to invest in foreign currency? Yes. Yes, you can. Question number 4: if my husband changes to an S Corp in 2021, what is the best or easier approach we can take for 2020 for my husband and myself? Well, I would say, Marie, start by completing your application with us. List the business as it is now, since that's truthful and accurate for the IRS. If it's an LLC, if it's a sole proprietorship, list what you have now. And then if you need us to change the sponsoring business, we can do that anytime. That's complimentary. Just send us an email to support@solo401k.com. Give us the new business information, and we will update the 401k plan documents for you. Okay. Next question from Marie. I'm still confused about how after-tax contributions work. Is it the same as the mega backdoor Roth? What are the benefits? So this is a great question, Marie. Voluntary after-tax contributions are a bit of a niche thing. They actually only really were becoming popular, the mega backdoor, in about 2015. So that's really new, really young when it comes to 401k contributions. I would say, Marie, if you are confused about how the voluntary after-tax contributions work, or if you're not sure what the benefits are for you, then you definitely want to work with a CPA or an accountant who can explain that to you. Because the truth is, it's not that beneficial for everybody all the time. Certain businesses, for their tax strategy, the pre-tax contributions are going to be way more beneficial. Other businesses, their whole tax strategy is trying to get as much into Roth as possible, in which case the after-tax contribution is a very valuable tool. It's not one size fits all. Using a solo 401k is a very personal journey because it's about your goals and your retirement outcomes. So if you're a little bit confused on the voluntary after-tax contribution or whether or not it's beneficial to you, the person to determine the benefits is your tax advisor or your trusted counsel that can actually run some numbers for you and walk you through how it can benefit you. And then you can make the determination together if it's something that you want to exercise. It's all built into your solo 401k automatically. But, not everybody uses it because it's just not applicable to everyone. Now, I do want to make sure that you have some resources available. So back to the screen sharing. If we go back to our website at solo401k.com, under Learn and Contributions, you'll see we have a dedicated page for voluntary after-tax contributions and a dedicated page for mega backdoor Roth. Marie, I would recommend that you read through these 2 pages. I think they'll be really helpful for you. And again, the determination of whether or not that strategy is going to be beneficial to you is really a conversation for you and your accountant or your tax advisor to have, so you can look at your particular situation and see what is the most beneficial for you. Just because something has all the bells and whistles doesn't mean you need to use all the bells and whistles. And it doesn't mean that all the bells and whistles are going to be beneficial to you. Sometimes they are, sometimes they aren't. It's good to learn about it by reading through those blog posts and articles, and then find out what works for you personally. And the way to do that is to make sure that you are telling your accountant what's going on, sharing your goals with them so that they can help you make a plan. All right. So I know we covered, 19 questions. You guys are so awesome. I'm so glad that you are jumping on here. Oops, someone else just put in a question. Okay, great. Let's see what we got here. Okay, Armando, question again regarding, I think Armando, you're still typing in. So go ahead and finish typing in your question. I'll wait here with you so that we can get to your question. Let's see, Jorge, these webinars are just awesome. I've learned so much in the last few days. Oh, saludos, Jorge. So glad to be on this journey with you. I'm so glad that this is helpful. We do these daily December Q&As because the last 10 days, especially of the year, You guys, it's nutty around here. I mean, everyone is trying to get their plan established by December 31st. If you're already a client of ours and you have your documents, you are golden. You are qualified for 2020. All you need to do is have a wonderful Merry Christmas and a Happy New Year, and you can make your contributions in January. You're good. You're set. But we really want to make sure that we're here for you every day, especially through the end of the year, because people have so many items they want to tackle. And right now, our team they are just thankfully flooded with new applications. And it's challenging to get to all of the emails and the voicemails every day. So we are doing these daily Q&A sessions so that we have a chance to actually hang out with one another and make sure that your questions are answered. So it's really good to have you all here. All right. Great. I think we've got here for you, Armando. So question again regarding note loans. Once I have the dosage made out, how does it get reported as gains to my 401k bank? Or hold on. I'm trying to understand your question here, Armando. So once I have I'm trying to understand what word might be there instead of dosage. Paperwork made out. How does it get reported back as gains to my 401k bank, or that money is going to that party and I'm not using it for personal use? I don't think I understand your question, Armando. I think you're making your 401k is making a loan. So you're writing a note to someone and you're asking how you report those funds back to your 401k bank account, so that the IRS knows that the funds are going back into your 401k and not for you for personal use. I think I probably deciphered what your question was, but please feel free to type into the comments if I missed it. So your 401k in this case is the lender. Your 401k is lending money to a third party. Your attorney or your legal counsel, someone's going to write a promissory note for your 401k as the lender. So your 401k is the lender, your attorney writes that promissory note, the borrower is on the other side, you send money from your 401k bank account to the borrower. Now, when the borrower makes those repayments, the money comes back into your 401k bank account. That's how the IRS knows the money's not going to you personally. It never passes through your personal bank account. It always goes to your 401k bank account or your 401k brokerage account. That way, the funds never pass to you personally. They go from the 401k bank account to the lender or to the borrower, and from the borrower back to the 401k as loan repayments or principal plus interest, however you're going to report that. I hope that was helpful, Armando. Let me know. 401k docs. Okay. Once I have the docs made out. Yep. Okay. So yeah, got you. Thanks. I've had that happen too, where you're getting the autocorrect and you're like, what? Doesn't make any sense. So once I have the docs made out, how does it get reported back as gains to my bank? Yep. So same question here, Armando, is once your 401k is the lender, so your attorney or someone is going to write the promissory note for your 401k as the lender, you send the money from your 401k bank account to the borrower. The borrower sends the money back to the 401k bank account as the loan repayment. And then as the plan administrator, you need to keep track of those loan repayments. So maybe you have a form that the borrower completes or that you complete every time they make a loan repayment. So that way you know how to keep track of the money coming in. Okay. So I think that is all that we have for today. You guys are awesome. Nerdy Rachel is the best. Yes, I love being a nerd. It's awesome. It's great. We have big old brains. It's wonderful. I always tell people, and you guys have probably heard me say this before. So number one, we always say group hug the clients because we love you. So bring it in for a group hug, you guys. And then number two is our clients have the wrinkliest brains. Now, Rachel, why would you say that? That's weird. Well, every time you have a new learning, your brain gets a little wrinkle on it. And your brains are all so beautiful and wrinkly from all of these new learnings that you are getting. I want you to just really give yourself credit. You are going on a very special journey having a solo 401k. You're taking control of your own financial future, of your own money. And that's powerful. So give yourself credit for that. Do your research. Make sure you're always taking the steps to look on your solo 401k knowledge base, on the blog, join these Q&As. We have tons of resources available for you guys. So make sure you're taking getting access to those resources. Take advantage of those resources that we've created for you. Join us on these daily Q&As if you have any other questions. And I think we've got one more question here by Marie. You are sneaking in, Marie. I love it. So Marie says, right now we have the foreign currency held by a third party. We can change the administrator once we open the 401k, correct? Yes, that's correct. If you've got the 401k, the foreign currency is held by a retirement plan with another administrator, you can change the administrator or open an account, another account with the same administrator in the name of your new 401k. Okay, I'm going to call it for today, guys. You are awesome. Thank you for all of these wonderful questions. And we are so glad to be here with you. Have a wonderful rest of your day. If you need us, we will be here tomorrow at 3 p.m. Eastern Time and every single day for the rest of this year. So go forth, have a wonderful day, and we'll see you tomorrow.